Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Sei-wan, professor of economics at Ewha Womans University. Professor Kim, good afternoon. Thank you for coming on the program today.
Good afternoon, Devin.
Well, let's start with the big picture, Professor. Bloomberg, according to its economic models, is saying the chance of a recession in the next 12 months is 100%. Now, this is one set of research, but still it doesn't look good for the American economy. What do you make of this projection, Professor?
First of all, I have to say that Bloomberg's economic forecast is not a crystal ball, but it is true that there comes more significant signs that U.S. and global economies are moving to early stage of recession. Recently, the IMF lowered U.S. economic growth forecast down to 1.6% level for this year. But U.S. government and U.S. Fed both deny that U.S. economy enters a recession. A U.S. recession is effectively certain in the next 12 months in new Bloomberg economic model projections. The latest recession probability models by Bloomberg forecast a higher recession probability across all time frames, with the 12-month estimate of a downturn by October 2023 hitting 100%, up from 65% for the comparable period in the previous updates. This forecast will be unwelcome news for U.S. President Biden, who has repeatedly said the U.S. will avoid a recession and that any downturn would be very slight, as he seeks to reassurance of Americans the economy is on solid footing under his administration.
Right, that would not be good news for the Biden administration. But despite this very prominent report by Bloomberg, stocks on Wall Street were up overnight. Corporate earnings are coming in higher than expected for Goldman Sachs, following on from Bank of America and New York Mellon. What's the story in the global equity markets?
Actually, the commercial banks' corporate earnings rise is a really good news to American economy because commercial banks are highly intertwined with all economic actions of households and companies. U.S. stock indexes rose on Tuesday, rallying for a second day as a combination of better-than-expected earnings and an easing of the turmoil in U.K. markets lifted investors' confidence. The S&P 500 climbed 1.1%, while the Dow Jones Industrial Average also rose 1.1%, and tech-heavy NASDAQ moved ahead 0.9%. The moves come a day after major indexes soared on Monday. Big swings have become commonplace for U.S. stocks in recent weeks. Over the past 2 trading days, Dow rose 3.3%, S&P 500 rose 4.3%, and NASDAQ rose 5.3%. In Asia, Nikkei 225 in Tokyo gained 0.4%, but all Chinese markets retreated in Shanghai and Hong Kong by 1.2% and 2% respectively.
Well, now, Korean stocks were up and down today. The Kospi looking like it was going to be higher, but in the end, not so. The big chip makers brought down the index, and a decline for the Kosdaq, too. Tell us about the domestic market.
Even with U.S. markets strong rise for 2 straight days, domestic markets all dropped today. Unlike U.S. markets, there were no signs of improved corporate earnings in domestic markets. Actually, it looks that Korean major corporations' businesses are relatively shrinking due to slowing global economy and domestic economy. For example, Samsung Electronics' third quarter sales and net profit both decreased in a large scale compared to both to previous year and previous quarter. The benchmark Kospi dropped 0.6% and Kosdaq further dropped 0.9% today. In Kospi market, foreign investors net bought domestic stocks, but individual and institutional investors combined net sales of 172 billion won adjusted market to downside. Most of top 20 large cap stocks retreated today. Samsung Electronics dropped 1.2%, while the second largest cap, LG Energy Solution, advanced 1.7%. But SK Hynix, LG Chemical, Kia Motor, Naver all retreated today.
Well, finally, Professor, Hana Bank has lowered its forecast for Korea's GDP growth next year to just 1.8%. If it turns out that way, it would be the first time we've had this high inflation and such low growth since 2008. What do you make of this report? What's your outlook, Professor?
As of now, Korean economy's growth momentum is losing its steam, mainly due to continuing high inflation, higher interest rate, and global economic downturns. To summarize major institutions' Korean economic growth forecast for this year, they go like Korean government's 2.5%, Bank of Korea's 2.1%, OECD's 2.2%, and IMF's 2.6%. All these figures are located above 2%. However, some foreign investment banks and the rating company Fitch locate Korean economic growth forecast for this year around 1.9%. Which is below 2% level. This time, domestic private bank economic research institute, Hana Financial Research Institute, released its economic growth for this year at 1.8%, which is the lowest among all comparable figures. I don't think this is a more dependable forecast, but it should be noted that Korean economic situation gets closer to Hana Institute 1.8 economic growth for this year. Korean economy has been facing lots of problems like stagflation and the war between Ukraine and Russia and high rising $1 exchange rate and so on.
Professor, thank you as always for coming on. We appreciate your insights.
Thank you very much, Devin.